invest in the place that we are the most familiar. However, we have to understand the place that we are the most familiar, does it mean that that is actually the best place for us to invest? So again, we talk about this thing called blind spot. So at the point of time, my blind spot was I thought that Singapore was the only place that I can invest. In fact, if you ask me to invest in the overseas market like the US, some of the thing that goes to my mind is number one, the US market is so far away. I mean, I'm not familiar with some of the companies over there. And of course, number two, what about the brokerages? I'm not even familiar with some of the brokerages out there. How many of you started off like me, you invested in, let's say, Singapore or whichever places that you actually stay in? If you're like me, can you just type me? Okay, Shushu, Yiling, Ellen, Hui En, Hui Yu, Glenn. All right, so we can see that a lot of us, we actually started off this way. But of course, when I start to explore about the US market, actually one of the things, okay, I remember at that point, it was actually my mentor that shared with me. He said that, Bowen, if you go and look at the Singapore market in terms of over the years, right, how much it has actually gone up versus the US market, and then you will start to realize that how much are you actually missing out. So for example, Sham, again, your question, which brokerage got the cheapest commission, guys? Until now, up till now, do you think we should focus more on commission, or do you think we should focus on taking action and actually learning more? All right, it's more about the return rather than the commission. In fact, every time people tell me, hey, Bowen, I want to actually wait for invest in a bigger amount so that I can actually spend less on commission, I always tell them that this is one of the worst decisions if you actually think this way. Because why? I believe that I rather you go and do more trade and practice more, and along the way, okay, the more you practice, actually, if you have the right practice, that's where your experience will gain even more. As compared to, sometimes people say, Bowen, when I do BOSS, can I do 30 days instead of 7 days? Because 30 days means that I only incur one commission instead of 7 days. Every week, I have to incur one commission. Then, of course, like I said, if you go and calculate 7 days versus 30 days for BOSS, which one actually give you higher ROI? So again, you will realize that, okay, 7 days, actually the shorter you go, in terms of absolute return on investment, 7 days is actually even more, right? So of course, again, we also want to say that it depends a lot on individuals. So how many of you at your work, right, you're actually very, very busy? If you're busy at work, can you type B for busy? Right. So for those of you who are very busy, what happened is that you want to also find strategy that are suitable for you. So for example, when you do BOSS, instead of 7 days, this is where you can actually go for 30 days. So that every single month, all you need to do is just review one time. Whether if it's expired, you can do another BOSS. If it's exercise, then you just go and monitor the stock, okay, and see whether you can do a sell call or whether you just want to hold on to it for now, right? So again, a lot of things is very much customized based on your busy schedule and also your suitability as well. Chen Ming, half a month super busy. So I think over here, like Tian Hui also asking, for beginners, is it better to start with BOSS or Strategy X? Question is, it shouldn't be whether is it beginner, intermediate, or whether is it expert. Again, it goes by number one, what is your capital size? For those of you with a larger capital, I would say that you can allocate more to BOSS. All right, but yet at the same time, okay, if let's say based on current situation, irregardless of the portfolio size, we know that the market is actually going up. Now is the bull market. So for bull market, if you want to capitalize on the capital gain, which one actually gives you more capital gain? Strategy X or BOSS, guys? Exactly. It's actually Strategy X. All right. So again, it's all about balancing and having your portfolio. Even for somebody in the 60s, you tell me you want to generate income. So that's where we can actually go for example, you do a Strategy X and then you go and do a sell call, which is Strategy X plus. It's all about percentage. So you don't have to be 100% BOSS because you need a cash flow. Yet at the same time, we want you to increase your capital so that your passive income can actually increase as well. How many of you agree with me? If you agree, type A. Okay, so I hope that you all get to understand, okay, all this, because now that I want to introduce one more strategy, which is Strategy Y. So that's where you also want to see whether does this Strategy Y suits your investment game plan or not. So why I personally love Strategy Y is because I always believe that if you want to be able to make money consistently in the market, you need to be able to make money irregardless whether is it a bull market or is it a bear market or whether the market go up, go down, go sideways. if you want to be able to make money consistently, you must know how to make money even when the stock goes down. So that is where strategy Y actually comes in, so that even if the price drop, you can profit from it. Now, later I'm going to share with you 2 ways we can actually go and do it. Okay, and this is extremely powerful. So even if right now market condition, a lot of people tell me, hey, Bowen, since now it is the bull market, so does it mean that I don't have to apply strategy Y? In fact, the answer is actually wrong. Okay, now is actually a very, very good time to use strategy Y to further optimize our ROI. Okay, further optimize our ROI. So without further ado, let's get started. Okay, because this is very, very interesting. For many of you, this is probably the first time you get to hear this strategy as well. So make sure that you can actually see my screen. If you can see, type PPT for me. Great, fantastic. So let's move on to strategy Y. How do you actually profit in the bear market? Of course, when I say bear market, it means that market is going down. Okay, but it doesn't have to be a bear market. Even in a bull market, you realize that market also don't go up in one direction. Market goes up and down, up and down. So whenever the stock goes down, or some company, in fact, you see some company is actually still going lower and lower, you can still continue to benefit using this strategy as well. Right now, okay, before we even go on to the strategy, we have to understand the mindset, because once you understand this particular mindset, it will help you to make even more money using this strategy. So we have on the left-hand side, miserable mindset, and on the right-hand side, we have millionaire mindset. So guys, can you tell me, do you want to be the red color or the green color? Millionaire, or do you want to be miserable? I'm sure nobody wants to be miserable over here. Okay, so what is the difference? Okay, I'm sure you have friends, right? Back in 2020, when all the growth company are making a lot of money, you have friends who tell you that they make a lot of money, buy into this company and buy into that company, and they tell you how good they are as an investor. And up till today, if you ask them the same question, you realize that all your friends disappear. Those people who make money in the stock market, right now, suddenly all, I don't know where they go. So this is the mindset, okay? At that point of time when they were making money, they were asking themselves, oh, how wrong can it go? Or they will say, I'm so clever because right now my portfolio is actually up. And what happened when the market starts to reverse? Okay, so when they start to lose money, one of the things that's going on in their head is, should I actually cut loss? Should I hold on to this stock? Or rather, what should I do right now? So they start to get a little bit lost about what is their next step, what is their game plan. How many of you can relate to this? And how many of you personally admit that, okay, in terms of investing, maybe you have a little bit of miserable mindset? You can type me. So I have to admit myself, okay, when I invest, I started off as a miserable mindset. So this is again, once you identify that you have this mindset, that's why these 3 days, we spend a lot of time, okay, to tell you all that once you identify, you want to break out of this. Okay, but of course, you must be very clear and set a clear intention that you want to actually break out of this to become a millionaire mindset. Now, what's the difference? Millionaire mindset, when they make money, they will not think that they are very smart. In fact, they start to think the next step. What do I need to do to protect the profit that I've actually made? So we talk about when do you sell off. That comes with what I shared yesterday about technical analysis, or even about rebalancing my portfolio so that I can actually, take out some of the profit that I make and invest into companies that are undervalued. So it's all about protection. Later, I'm going to share with you how strategy Y can also be a very powerful protection and hedging tool as well. And the second one, my portfolio is up right now and I should seek more guidance to stay on the right track. So I think this is something that is very, very clear to all the millionaire, multi-millionaire, and even billionaire, is that they never stop learning. Okay, one of the biggest things that everyone is afraid of, okay, is this thing called blind spot, as we have mentioned, is that I do not know what I do not know. So one of the easiest way is to keep asking other people, okay, so that I can actually see, is there anything that I actually miss out? So that is also why, even for myself, when I invest, I do actually reach out to people like Sean, people like Pete, and even other fund managers out there. And also, like a few months back, our team actually flew all the way to Omaha to reach out to as many people as possible. The whole idea is not just to learn strategy. In fact, we never even asked them, can you share with me what is your strategy? Can you tell me what stock you buy? In fact, some of the things that we always ask them is, can you share with us the whole 1 or 2 years, what is the biggest lesson that you actually have? So actually from there, we get to learn a lot of things that even for themselves, they also learn through the process. So this is very, very valuable. All right. And of course, for people who actually, let's say in a bull market, you make a lot of money, okay, what happened is that you already plan. Let's say today is a bear market. What do you need to do? You need to buy. In fact, like what UOB chairman previously mentioned, when the price is low, all you need to do is just buy. So if you're very, very clear about your game plan, when the market drops, do you need to be worried or should you be excited? You realize that, okay, over the last 6 to 1 year, okay, when the market was dropping, many of our students are not worried. In fact, they are very, very happy, okay, accumulating the stocks. And of course, right now, they are actually, riding on the rewards that they have actually built up over the months as well. So this is really the difference. So can everybody say, I am a millionaire? I want to have a millionaire mindset. Type MM. Millionaire mindset. Very, very important. All right. So that goes to this thing called reaction versus action. So basically, people with the miserable mindset, they're always reacting. So whatever the news tell you, whatever, anything that you see, you always react to it. I can actually tell you right now, if you go and look at some of the news out there, out of 10 news, maybe 8 or 9 will be negative news. Why is that so? Because today, if you're a news provider and you say that right now we are in a bull market, the stock is going to go higher, do you think people will be excited? Or do you think actually people get more excited and want to watch the news when you say that, hey guys, right now potentially there's a recession coming up, based on this indicator, we might be looking at one of the biggest bear market that's actually coming up. So again, people always like to do the opposite things. Whenever it's a bull market, they talk about the bear market. Whenever it's a bear market, people will tell you, hey guys, maybe now is the best time for you to start buying share. So again, when it comes to news, we try not to overreact to it and always have a game plan by looking at the long term. So now we come to the very, very important part. How do you actually hedge your investment? Actually, all of us, we already know how to do it. Because why? Have you guys actually bought insurance before? Or rather travel insurance? If you have, type 1. If you have never, type 0. Let's see if you guys are those that like to save on travel insurance. Okay, let's tell you the truth. So for me, right, when I buy travel insurance, I also very, very selective. So for example, if I go to places that are relatively near, like Singapore, like Malaysia, if I go Malaysia, actually, I don't buy travel insurance. But to me, anything further than Malaysia, if I go Thailand, if I go Japan, if I go Europe and US, in fact, the further I go, the more insurance I want to be protected. The more I'll buy. How many of you are like me? If you're like me, type HB. Okay, I see if anybody is also like me, go JB, never buy one. Go Batam, Bintan, all the nearby places that I never buy. Okay, and the reason is because, right, anything that is nearer, for me, I feel that I can self-insure. Okay, but if I go overseas anywhere further, again, my risk is actually higher. So whenever my risk is higher, I want to make sure that I got more protection. Things that are not within my control. So again, it goes to the same thing. Today, if you look at your own portfolio, if your portfolio is big, then definitely I think it's important for you to get some insurance. Okay, because every losses that you are going to make is going to be very, very costly. And again, for those of you who just started, it doesn't mean that if you have a small portfolio, you shouldn't buy insurance. Because why? Your lifetime income is actually going to be a lot more as well. So if you start right, then of course it is going to be even better for you. So what happens is that very interestingly, just to share with you, recently, okay, in fact, not so recent, maybe about 6 months ago, okay, I actually bought a travel insurance to US, not US, to Nepal, because I was going for a climbing trip. So at that point of time, right, this is my first climbing trip. So I didn't know how much the insurance is going to cost me. So in the end, I paid about $181 for one single trip. This is not an annual plan. This is one single trip, $181. How many of you think this is expensive? Or if you think this is cheap, you can type cheap. Is it expensive or cheap? Right. So at first, I feel that it is quite expensive because usually when we go anywhere nearer, it's about $30 to maybe $50. That's around the range. So 181 is like close to 250 Singapore dollars. So I thought it is very expensive until I saw in this particular insurance, right, there's actually a clause that mentioned that, okay, in the event of if you need any help or medical injury or things like that, they actually can cater helicopter to actually fetch you down. So I thought, wow, actually this one actually not bad. I mean, if I go up and if I really need any evacuation and all that, okay, I can have a helicopter right down. Then of course, the guide that actually bring us there, I also share with us and say that, hey, Bowen, if let's say, right, if you go up and you feel tired, you don't feel like climbing down, right? then you can just say that you're sick. Then I can also help you to activate the helicopter to actually take you down. Then I thought, wow, like that not bad, eh? Helicopter ride, if you guys actually go to overseas and you take helicopter ride, you know easily it's a few $100, easily. So I thought, well, if I go up and I feel lazy or anything, I take the helicopter ride, enjoy the Nepal view, the snowy mountain and everything, and it's all already paid for by my insurance. Then I realized that, well, this one actually undervalued. Okay, so that's where I realized that doesn't mean that high price means that it's expensive. It depends on what is inside the content itself. Okay, so guys, this is just a tip for you guys. Next time if you go climb, go and buy the insurance that cover helicopter. Can enjoy the ride. Okay, so same thing. Back in the stock market, when we actually want to protect our portfolio, we can also buy insurance so that when the price actually fall, you get paid. So when the price drop, everybody very scared, very unhappy because they see red color. But for your portfolio, you see, wow, I make money. In fact, you will tell your friend, I hope that the price of this stock drop even more. Then you make even more money. So this insurance is actually using options. So how do we actually do it? So this is strategy Y. What we are doing is basically buying a put option to lock in the selling price. Okay, to lock in the selling price. Let me give you a scenario. So for example, right now, ABC stock is at $100. So based on the technical chart and everything, I foresee that it is going to drop. So I do a buy put to lock in the selling price at $100. So which means that because I buy the put, I am the owner. Okay, I have the right to actually ask the other party to basically buy from me at $100. So I lock in the selling price. So if the price dropped to $90, what happened is that I can just go to the market, buy at 90, and then I exercise this contract and the other party have to buy from me at $100. So can you see how much do I make from this? I go to the market, buy at 90, I exercise the contract at 100, so I make $10. Of course, $10, I have to minus away whatever premium that I actually paid for the insurance, okay, which is actually the buy put. So you can think of this as like buying insurance. You lock in that particular price. So if it drops even more, then I will make even more money as well. So this is the concept behind buying a put option. But in short, just remember, when you do a buy put, the price drop, you make money. Okay, very, very straightforward. So this is the opposite of buy call. When you do a buy call, the price go up, you make money or lose money, guys. Buy call. If the price go up, you make money or lose money. Exactly. So buy call, go up, make money. Buy put, come down, make money. So this is how you remember. So one is buy call, one is buy put. So this is the two difference. So there's actually two ways for us to actually use this buy put, this strategy Y. The first one is for insurance. The second one is I bet that the market will actually drop. So I foresee that the price is going to drop. So right now, I want to ask all of you a very, very important question. What do you think is the difference between this insurance versus the second point, where you bet the market will drop? There is one very, very distinct differences. I want you all to make a guess. You all can just randomly guess. What is the difference between buying insurance and the second point? Expiry, no, not exactly. Okay, fantastic. Okay, Xingyue actually got the correct answer. Insurance is when you have stock. So guys, today when you buy a property or housing insurance, if you don't have a house, will you buy it? No. If you don't have a car, will you buy a car insurance? The answer is no. So insurance means that today you have a stock. For example, some of us, we own Tesla stock. So the majority of my portfolio is in Tesla. So I scared all my profit would disappear if Tesla suddenly drop. So that's where I want to do a buy put to protect in the event if the price start to drop, at least I can make money by hedging. So that is the purpose. You have the stock, you want to protect and hedge against the losses or the drop. The second one is you don't have any stock, nothing. But then you look at the chart, wow, I think based on the indicator, the price will drop. So when that happens, you do a buy put. And then if it drop, you make money. So that is just the key difference. But basically, in short, execution-wise is very, very similar. It's just that the concept is a little bit different. If you understand this so far, can you type U for me? Fantastic, fantastic. Wow. Right, let's move on next. So let's talk about the insurance first, the first part. So how do we actually protect our portfolio? Of course, you can protect in a few ways. Number one, you protect against the whole indexes. So let's say we are heavily invested into the US market. So we can do a buy put on SPY, or if you are more into the tech sector, you can do on QQQ. Some of us, maybe we invest into the Hong Kong market. So overall, you just want to protect against if the Hong Kong market start dropping, you can do a buy put on the Hang Seng Index as well. Right, and of course, this one is previously, you can see back then, for the S&P 500, actually there was already a very, very obvious sign that the market is actually going to drop. So how do we know from here? Actually, if you look at this is actually the 3 EMA line. So can everybody just help me to type in 3 EMA? Yeah, so this is actually another technical indicators that you can actually use to determine whether there's a change in direction. So previously everything was going up, then you can see this cross. The green color crosses the orange line, and then subsequently the orange line crosses the red line. So this is what we call EMA crosses. You can just go and search on it. I think there will be very, very clear explanation on it. Okay, so whenever you see this kind of crosses, it's basically telling you that the trend is now going downtrend. So this is the first indicator. This is the confirmation. So earlier on, I mentioned actually back in our mentorship, right? There's a framework. One is trend, right? Actually, during the trend, this is one of the first thing that we actually look at. This is the first thing that we actually look at, and then we look at the indicators as well. So actually, if you look at this, right, all these are actually you can do a buy put, okay? And then when the market drop, actually you can also profit. But in another case, if let's say today we are not here to make money, if not, it's not very nice. Other people lose money, you make money. But let's say previously you make a lot of money, 2020 bull run, all your portfolio is green in color. You bought into all your C Limited, etc., all making huge profit. When you see this kind of indicator, what you can do is maybe you can start to buy some insurance on your individual stock as well. So this is also one of the things that you can actually do, because I know some of you are heavily invested into specific company, and then you want to actually hedge against it. Just to do a check, how many of you, right, your portfolio consists of less than 3 stocks? That means majority of it is in maybe the same company. Maybe you can also type in the company name. The company name, what is the company that you are heavily invested into? Let's take a look. Okay, cannot see that. Okay, Alibaba. Wow, William and Li Qiang is heavily invested into Alibaba. I think now it's very, very painful. Okay, unless you bought it recently only. Okay, Tesla, Amazon, and Google. Wow, so Sean is actually should be pretty happy. And then we have Square, Nvidia. Wow, for those of you, Nvidia. Any and Ivy should be laughing all the way to the bank. Almost everything is in. Okay, so for example, I just use Nvidia as an example. I just show you guys the chart so that all of us have a better understanding. Okay, let me just go to the chart itself. So, okay, so if you look at NVDA, which is Nvidia, so guys, you all can see. So we can see the Nvidia actually went all the way down. Back in 2020, it went down how many percent? Let's see. So from the highest point to the lowest point, it has fallen about 68%. 68% on a single stock, guys, I can tell you it is very, very scary. Okay, especially you thought this is a solid company, but how come a great company can drop so much? But if you know the fundamental, you realize that actually during this period, right, when everything was dropping, do you know that Nvidia continued to make money quarter after quarter? Right, so you can see the time frame over here. So this was actually from 2022, okay, all the way to the bottom. So about close to 1 year. So during this 1 year, there's actually 4 different so-called quarterly report. So you can see while the price is dropping, the company is announcing better and better results. So as an investor, if you know what you're doing, actually you're buying more along the way. But what happened? Let's say you bought it at the bottom. Wow, very, very good timing. You bought it at the bottom. And right now, from the bottom, you can see, even if it goes back to the original high, instead of 60%, can you all see something very interesting? The price actually went up 280%. So this is also one of the reasons why when the market is low and you buy it and then it go up, actually your ROI is going to be a lot more as well. Right? And of course, for some of you, if you invested and hold it all the way until the top, you realize that you'll be sitting at about 300% in terms of share in terms of share. So if let's say you have actually done a strategy X on this, can you see that it's easily about maybe 5 times to 10 times? So that's about 3,000%. Okay, 3,000%. So which means that if you put in, let's say $10,000, your $10,000 actually become how much? 300,000. Guys, 300,000. That is a lot of money. So right now, your profit is 300,000. So what should you do? Some of you will be thinking, Bowen, should I sell it away? Or should I continue to hold it? Because I think 400, maybe it can go to 500, whether it can go to 600. So what you want to do is, instead of just consistently thinking about when to sell it away, you can actually consider hedging it. That means you can actually go and buy insurance so that in the event if it drops, so your position will definitely drop in terms of the profit, but at least as it drops, you start to recover. Your losses will actually be minimized. How many of you understand this concept? You understand? Can you type in H for me? H for hedging. So again, that's why I say this strategy, right, actually is very, very useful. Because why? A lot of the stock back in, early this year, it has actually gone up quite a fair bit. So some of you, if you are really making good profit, you want to start thinking about how do I actually hedge my winning position. So this is important. So the next question a lot of people will tell me is, Bowen, actually, if I make so much money, right, I should just go and sell it away. Okay, sell away, take the 300 or even 3,000% and just go for holiday, right? So guys, this is also the thing that I need to share with all of you. Because a lot of people, why is it that they are not a millionaire? Is because they always sell too early. How many of you, right, you have heard of Microsoft 10 years ago? If you have, can you type in MSFT or type in 10? 10. 10 years ago, you heard of Microsoft. Okay, you can see so many of you already heard of Microsoft 10 years ago, right? But why is it that you never buy? Or maybe some of you maybe you tell me, Bowen, actually 10 years ago, I did bought into Microsoft. Okay, then the next question is, then what happened? Okay, why are you not a multi-millionaire? Because you can see 10 years ago, let's take a look at the share price. 2013, let's use 2013. The share price of Microsoft is at $35. Right now it's at 337. So that's almost like 1,000%, 10 times. Okay, that's a 10 bagger over here. So you realize that if you have the habit of selling away your stock, $34 you buy, maybe it goes up to $40, $50, you sell it away. And I want to ask you this thing, if you buy at 30, sell at 50, will you actually go and buy back the same stock at $60 at an even higher price? Does it make sense or not? If you think it makes sense, you type MS. If you think you will not buy, you type no. Okay, I can tell you, human psychology is like that. You buy at 30, you sell at 50. I ask you to buy back at 60, you will tell me, siao, the time I sold it at $50, now you ask me to buy at an even higher price. But you have to understand, the stock market, if you invest in a good company, it will just go higher and higher and higher and higher. Right? In fact, one of the best example that I like to give is this company called Berkshire A-Share. Right? Some of you might have already heard of it. Is that if you look at the share price of Berkshire A, it's 521,000. This is for one single share. Okay, in case you are wondering, Bowen, I think this stock $300 already very expensive. How much higher can it go? So I say 300 versus 500,000. How much higher can it go? You realize that there's actually literally no limit to how much share price in terms of prices it can actually go up to. Okay, so it's the same thing. You can look at Berkshire. Previously, it was at how much? 2,000. It was at 50,000. At that point of time, guys, 20 years ago, I tell you to buy a stock at 50,000, you will tell me, Bowen, you are crazy. 50,000 20 years ago is a lot of money. In fact, today, you say the share price 50,000, people already say you're crazy. But 50, go to 70, go to 80, go to 100, go to 200, go to 500. It will continue to go up because prices are just going higher and higher because of inflation and because the government is just printing more and more money. That means the money that you have is going to be devalued every single year. If you start to understand this, can you help me to type in you for understand? So let me just go back to my slide. So right now, I want you guys to actually start thinking, okay, when you actually make money, how do you actually start hedging your position? That means you start to protect your position so that even if it drops, overall you will still make money. Okay, but as it drops, the profit that you make from this strategy Y can actually help you to go and accumulate even more share. So that after that, when the price continue to go up, your ROI, is it going to be even higher or is it going to be lower? You realize that if you hedge and the price drop, you buy it even more at cheaper price, then this stock, if it recover, you're going to make even more from it as well. So this is really the power of strategy Y. So how can we actually execute this? Let me share with you. So there's a few conditions. One of the key condition is we tend to do a buy put at all-time high. What do I mean by all-time high? So let me just draw for all of us so that we can have a better understanding. So for example, earlier on, I talked about NVIDIA. So for example, NVIDIA has been going up previously, and then it started to go down. Okay, and after it goes back down, so let's say you bought it at the lower, and then it started to go back up. So this was the previous high. Can you see? The highest price back then. So let's say you bought it over here, and then it goes up. So as it goes up, you don't have to do anything. But whenever you can see that as it touches the all-time high, so this is also our resistance. We talk about support and resistance. So again, when we talk about resistance, it doesn't mean that 100% it will come back down, but there is a higher tendency that is going to get resisted at the all-time high. So as a result, over here, this is where you can do a buy put. Okay, you do a buy put over here. So in the event, in the case of NVIDIA, actually, you can see that it actually went even higher. So let's say over here, you hold on to this position. Over here, you never sell away. You have this insurance. So as the price continue to go up, do you think overall you will be making more money or less money? You realize that actually it's a good thing. Okay, why? Because overall your disposition is going to make even more money. Okay, but what happens is that over here, you pay a little bit of fee for the insurance. But what happens is that, are you going to make money from the insurance in this case? The answer is no. So it's literally you're going to burn away the insurance money. But overall, you're going to be happy as compared to your friend. So your friend will tell you, hey, Bowen, wow, actually, it already touches the all-time high. I think I'm going to just sell it away. So if your friend has sold it away, and then today the price is over here, you will be laughing at your, okay, maybe we shouldn't say laughing, but your friend will be actually crying, say, hey, Bowen, you're right. Actually, at the point of time, I should do the same thing as you. Continue to hold on to this, but at the same time, I go and do some hedging. Overall, your position will actually be more profitable than your friend. And this is just an example, because like I said, as the price go up, now your friend will be having this problem. Hey, Bowen, when should I re-enter the market? When should I re-enter the market? Okay, and you realize that if the price continue to go even higher and higher, you don't really care that much. You just continue to reap the reward and all that. But your friend will consistently be thinking, when should I go in again? When should I go in again? Because he sold it at the all-time high, right? So again, this is to help all of us to build a portfolio that will grow over time. Okay, that even if it drops slightly, it's okay. In fact, we should be happy that it drops slightly so that we can, so let's say over here, if it drops, so can you see this portion, your buy put, your insurance will make money. So you can also use the money that you make to accumulate even more share. Subsequently, when it recover, can you see your overall ROI is going to be even higher. So this is the thing that I want to share with all of you. So when we do a strategy Y, basically what we are doing is to do a buy put over here. Now, how do we execute? We do a buy put at +1 strike price. So this is important. That means if let's say the price right now is $30, so we go slightly higher than $30, +1 strike price. And we choose more than 240 days. So this one is important. Okay, more than 240 days. So it's about 8 months or more. 8 months or more. Then of course, maximum position, this one also very, very important, is 5%. So can everybody help me to type in 5%? Why do I want you to type in? Because this is super, super important. Portfolio sizing is extremely important in this particular case. So if your portfolio is $10,000, how much should you allocate for this buy put? Can everybody help me to type in? If you have $10,000, what is the maximum position you can allocate? Fantastic. Okay, 5%, which is going to be $500. I hope that when you buy your own insurance, you don't spend half of your asset or half of your income to buy insurance, correct or not? When you buy insurance, we always use a small amount to protect against a bigger amount, right? So same thing, insurance, just keep it maximum 5% in this particular scenario. Now, when do we actually exit? Okay, number one, if it hit the support. So of course, again, this is based on technical analysis. If you know where is the support, you can actually go and, so let's say there is actually a support over here. If it touches the support, then this is where you can take profit. Then of course, next thing is if it hit 120 days left. So let's say it goes a little bit sideways or very slow, left 120 days, just go and take profit. Last but not least, trend change. In the event of this, instead of coming down, let's say it actually continue to go up even higher. Okay, continue to go up even higher. So once you can see that it's already very obvious that it is not coming down, this is where you can also just close off your insurance, take back whatever amount that you have. But sometimes, right, because the price has really gone up, the insurance that you can get back maybe is a small amount only. So if it doesn't make sense, let's say you put in $300, and right now, if you actually close it, right, only left $20 or $10, usually sometimes for me, I'll just leave it there. I'll just leave it there. All right. Now, of course, maybe some of you say, yeah, confirm will not come down. And then, of course, you can just take back $10, can go and buy a meal and things like that. So this is actually based on individual as well. So this is trend change. Let's take a look. So let me share with you. This is one of our students also. Okay, Felicia. So back then, okay, just now I mentioned that when you know strategy why, even when the market is going down, you can actually make money. So for Felicia, you can see the date is 7th of April. So at that point of time, that was the bear market. Okay, so 28th of August, you can see her capital, instead of dropping, it actually went up. So market go down, she make money. How do you think she did it? Obviously, it's actually using strategy Y. So that's why actually last year, our students were very, very happy. Okay, because why? Even when the market is going down, they also learn how to use this to profit from the bear market as well. Now, that is just part one. Okay, the more exciting part is that now that she actually make money, and then subsequently when the market reverse, okay, you can see now that she can use the profit that she actually made, that 16,000 additional, she can invest into cheap company, very, very cheap company and great and cheap company at that point of time. So this 116K is going to continue to accumulate and compound even more for her. Okay, that's where she start to scale in a bull market. So again, bear market is the best time for you to use this strategy to accumulate bullet. And then when the market is at the bottom, or whether when you see any opportunity, okay, where the price is good, okay, you just start buying already. So again, this is based on individual strategy as well. So you can see subsequently a portfolio went up to about 200 over 1,000. Okay, this is this year. This is this year in May already. So how many of you wish that you had learned this strategy during the bear market? If you hope that this is you, can you help me to type in F for Felicia? Okay, I also hope that you already learned this, but don't worry. Okay, I think now there is actually still opportunity. Like I say, even in the bear market, in the bull market, okay, there will be opportunity where the market will actually come back down slightly or go sideways. Using this strategy, you can still continue to stay profitable as well. So again, this is actually my friend's story. Okay. So again, guys, please promise, right, not to share all the case study that we actually share with all of you, because again, some of them are quite sensitive. Okay. Imagine my friend know that I talked about his stuff over here. I don't think he'll be happy. Okay. Okay. So guys, can you promise me that you will keep this within this 4 wall? Okay, this 4 Zoom room. If you promise, type P. Type P for promise. So let me share with you. This is my friend. So back in 2020, okay, he bought into this company called C Limited, which is Shopee. Some of you might be familiar. Made a lot of money, like, okay, freaking hell, a lot of money, okay, from this. So when he make money, okay, he started to tell me, hey, Bowen, I know that you have been investing. Okay, actually, you should learn from me and things like that. Okay, I say, okay, happy for you. Happy for you that you're making money. So of course, right, at the same time, I also share with him, because I told him when the trend changes, that point of time, I told him, hey, actually, do you hedge your position, or do you want to consider selling away some of the profit that you have actually made? So at the point of time, my friend was like, hey, Bowen, now that the price drop, what do you think I should do? Just now, like what UOB mentioned, if the price drop, I should. Can everybody help me to type in the 2 words? Price drop, do what? Buy more lah. Okay, buy more. So that's exactly what he did, okay, at that point of time. So when the price dropped, he say, Bowen, don't worry, this is $300. I can tell you this company, huge potential. It will go up 500, 600, or even reach $1,000. So as the price drop, he buy, continue to buy. Okay, until he got no more bullet already, right? What he did was he actually went into margin. Okay, borrow money from the brokerages to continue to average down. Okay, so of course, when you do margin, right, what happens if it recover, then good lah, you can make money. But if it continues to go down even more, that's where you will receive margin call. So when you receive margin call, basically 2 things happen. Either you top up more money into the account. If not, it means that literally, right, they are going to wipe off your entire account. That means everything becomes zero. So at the point of time, actually, when my friend came to me, right, and asked me, can you actually, lend me a bit of money and do this, and buy into this, like, you're crazy already. Even though I want to help my friend, but I can assure you that at that point of time, right, I look at the trend and everything, I say, hey, bro, chances of this is going to go down even more. If I lend you this money, of course, like I say, if I lend you, I just assume that this money I'm not going to get it back. But at the same time, I don't want to give him any more hope that this is going to actually recover, at least for that period of time. Right. So that's why I think this one is my friend here, right? He's not going to be happy because I didn't lend him the money. But in the case of him, okay, he got the margin call, and of course his whole account got wiped out. So again, goes back to the same story. Guys, when you make money, especially right now in the bull market, right, I'm pretty sure that all of you, right, if you invest correctly with the right guidance, you will actually start to see great profit inside your portfolio. So making good profit is number 1. Number 2 is also know how to protect your capital, protect your profit. That's how you can actually make generational wealth, okay, lifetime of wealth. Very, very important. So again, we always say, doing the right thing isn't always easy, okay, but just remember that doing the right thing is always right. So what we want to do over here is really to do the right thing, okay, which is actually to learn how to protect our portfolio over here. So this is another example just to share with you how we can actually use strategy Y to benefit from it. Okay, and later on, I'm going to let you guys practice the psychology behind strategy Y. So this is Suncor Energy. So I want you all to see, let's say we bought it at this red color circle. We bought it at the low. And then the price go all the way up until it touches the all-time high. So right now at all-time high, okay, the price start to drop. So we did a buy put. So everybody, we did a buy put at the all-time high, and then now it starts dropping. So all of us are profitable right now. So I want all of us right now, right, to make a decision. Whether do you want to take profit or do you want to continue to hold on to it? So right now the price from 42 dropped to 32. Can you all help me to type in? If you want to take profit, you type TP. If you want to continue to hold on to it, type H. Okay, let's see. Wow, we can see quite a number of you are taking profit. Some of you are holding on to it. Okay, I give you maybe 3 more seconds. So 3, 2, 1. Take profit over here at the bottom. For the buy put. Okay, so congratulations. For those of you who take profit, you are making money. But for those of you who hold on to it, the price have now recovered back to $36.60. Okay, so right now, for those of you who are holding on to it, you have to make a decision. Do you want to take profit now, or do you want to continue to hold on to it? Can you help me to type in the chat? For those of you who typed holding on just now. Okay, hold, take profit. Wow, about 50-50, half of you hold, half of you take profit. Okay, so for those of you who take profit, I still want to congratulate you because you are still making some money. Okay, a little bit lesser, but still profitable. But for those of you who continue to hold on to it, this is what happened. The price went all the way down to about $29, close to $30. So what is your decision right now? Will you take profit or will you continue to hold on to it? Take profit now, take profit. Okay, Irene will hold. Let me see, Colis will hold. Some of you continue to hold on to it. Serene holding on. The rest, I think, so far are all taking profit. Okay. Ada also holding on. Kim also holding on. Okay. So for those of you who are taking profit, congratulations. You have a huge profit for this strategy. Why? Now, for those of you who are holding on to it, right? This is what happened. The price starts to go back up now. Okay. So again, just now I mentioned what should be the criteria for taking profit whenever it touches the support line. Okay, so in fact, just now, okay, by right, you should just go and take profit lah. This is what we meant by follow the rule. Can everybody type FTR? Okay, follow the rule. The rule is if it touches the support area, just go and take profit. Now, the question that a lot of people are going to ask me is that, hey, Bowen, what if I continue to hold on to it and the price goes down even more? Will it happen? The answer is maybe yes, maybe no. Okay, but the question I want to ask all of you are, if let's say in this particular scenario, you continue to hold on to it and the price really drop a lot. So are you going to make money or are you losing money? Why do you lose money? You have a buy put, you did it over here, and the price continued to drop even more. In fact, you'll be making even more money. Okay, you make a lot of money. But what happened is that because in this particular scenario, you didn't follow the rule. Didn't means a cross. So the next time you are going to apply this, the same scenario happened. Will you follow the rule or not? The second time, if it happens again, it goes to support. Will you follow the rule? Yes or no? You realize that you will not follow the rule because the last time you didn't follow the rule, you actually make a lot more money. Okay, so the next time it happened, you start to have a lot of doubt. Hey, the last time I make a lot of money, I think maybe this one will go down even more. So you don't follow the rule. Then the third time, the fourth time, the fifth time. So you realize that why we want you guys to actually follow the rule. It doesn't mean that if you just simply follow the rule, that will be the best optimum price. For example, we tell you, if you buy now at this particular signal, it is the lowest. We cannot guarantee you the lowest, but I can tell you that if you follow the rule, chances of you making money and reducing your risk is going to be a lot higher. All right, so that is the whole idea of this thing called FTR. It's not there to tell you that this is the best time to sell or the best time to buy, but rather is to give you a game plan so that you can actually make money consistently in the stock market. Right? Again, you understand, investing, right, consists of three things. Number one is the method. Number two is the mindset. Okay, so again, I always believe that mindset is extremely important. Why a lot of people lose money? Not because of the strategy. We have taught a lot of people the same strategy, but we realize that how come some people make a lot of money? How come some people use the same strategy and lose a lot of money? It is because the mindset is very, very different. Okay, and of course, some is the method. They never follow the rule, they break the rule, anything that they can break, they go and break it. Then, of course, it can be very, very dangerous. Okay, so always follow the rule. So you can see this is an example of students who follow the rule and somebody who never follow the rule. So Celia on the left, okay, basically did a buy put, gain a few 100% over here. But I want y'all to learn from something that she did really, really well. So after she made money, right, you can see over here, she keep her eyes on the last big drop and prepare to collect good company. Prepare to collect good company. What is the mindset? Is it a millionaire mindset or is it a miserable mindset? You can see that Celia have got a millionaire mindset. She already planned the money that I make from this buy put, I am going to use it to go and look for good company, and then I'm going to start picking all this good company. So that is what we call by millionaire mindset. On the other hand, we look at another student. Okay, this one I never show the name. Also did a buy put. Okay, but she almost lost close to 50% of her entire portfolio. I want y'all to look at this particular statement, right? Can y'all tell me what went wrong for this student on the right? What went wrong? Hold too long, maximum 5%. Thank you so much, Antonio. Okay, straight away got the correct answer. Remember, the rule is maximum you allocate 5%. So if you allocate 5%, how much can you lose maximum? 5%. There's no way you can actually lose more than 5% if you follow the rule. All right, so for her to lose 50%, technically it means that she has put in more than 50% on this buy put position. So that is extremely, extremely dangerous. And of course, what is the action behind her doing it is because of greed. She wanted to actually capitalize using this strategy. Market goes down, she can make more money, and things like that. She want to aim for higher return. But as a result of it, while chasing the higher return, does she really get higher return? No. You realize the people that like to chase high return, in the end, what happened? Their portfolio is always underperforming. Right. So again, this is where we say that, never again chase super, super high return. Because as a result of it, actually, you go and take on extreme risk, very, very high risk. So for me, right, losing money is not the worst thing that can happen. Okay, because if you lose money, you take it as a learning lesson, just restart, and then I think you still have a very, very long runway for you to make back your losses. But what really, make us feel very sad in the case of this student is that because of this episode, okay, she actually said that maybe I've been thinking, maybe I should quit investing. So you can start to see that if she quit investing, is there any chance for her to make back the losses? Yes or no? Any chance? No chance, because you give up already. I've heard of this sentence that I love a lot. Okay, you only lose, right, when you give up. In fact, if you make any mistake, it doesn't mean that you have lost. You have not lost. It's just part of a learning lesson. In fact, the route to making a lot of money is to make small mistakes along the way. But why a lot of people lose money is because they make small profit and they have huge losses. So that is very, very dangerous. So sometimes when you make small profit, people thought, wow, I think I'm very good because I keep on making money. But one losses is all it takes, right, for them to wipe out the account. So that is very, very dangerous. So this is what Pete mentioned, and I really, really love it. The loss is not in what you can measure right now, but it is in what you can achieve in the future. So if you give up right now, actually what you're losing is not just that particular trade. You're losing out the potential of the next 10 years, 20 years, the potential that you can actually make by investing correctly. So again, I hope that for those of you over here, if you are currently right now losing money, okay, number one, don't give up. Okay, number two is always to reflect on what are some of the mistakes that we actually made previously. And of course, number three is to get feedback so that you know how to improve, how to be even better. And of course, like I said, to take action and to move forward. So again, you have a long runway, and I think we can all achieve even more moving forward from here as well. So if you look at the market right now, okay, let's just take a quick look so we can also see if there's any opportunity right now for the SPY. So you can see based on the chart itself, let me just go back to the day chart. Okay, so right now the market, okay, it has gone down quite a fair bit previously. Okay, this is the bear market, and then right now the market has kind of reversed. So you can see the reversal, right? Same thing, it has actually happened and shown very, very clearly. I'm just going to remove some of the drawing. Over here, the crosses. So remember just now we talked about the crosses. The green crosses the orange and the orange crosses the... So these are all indicators that it's confirmation that the bull market is back. Okay, so this is confirmation, CF. Right. So of course, if you go back to the chart right now, okay, is there any opportunity or not? Let me just draw the support and resistance so that we can see very, very clearly. Okay, so this is how I would have drawn it. Okay, just connect all the top and the bottom together. Okay, you can just draw it, just try to connect as many as possible. You can see right now, the price, even though it's actually at the top, but there's a chance that it might actually come back down from here. Back into the range, before going higher and higher. So again, like I said, it is definitely certain that the bull market is back here, but is it going to go up in one single direction? Probably not. So can we actually capitalize and make some profit, in the event of it coming down? The answer is potentially yes. Okay, but yet at the same time, later I'm going to share with you, if possible, we try not to do it on the index, or we try not to do it on good company. Because why? Good company, there's a tendency that it will go out. Okay, but can we do this on a bad company? The answer is yes, because why? Bad company, naturally it will come down. So same thing, when the stock come down, it doesn't go down in one single direction. So you can also capitalize on this. Every time it reaches the resistance, okay, I draw better. Okay, every time it touches the resistance, you can do a buy put. So when it goes down, you make money. How many of us start to understand and appreciate this strategy? Why? If you understand and appreciate, can you type why for me? Okay, I think there's a question on the EMA line. Okay. Okay, so again, I hope I can share with you everything, but again, there's a lot of things that, due to time also, but y'all can just go and search for 3 EMA. But I can share with you how do you actually put it in, put this 3 EMA in, and we just close it first. You just go to indicators. This is your trading view, which you all are familiar with. Just search for 3 EMA. So there's this guy called Victor Greger. Victor Greger, 3 EMA. So just click. Just click on it. Once you click on it, can you see that it will appear? 50, 100, 200. So personally, for me, I like to use 20, 50, and 200. So I will just change it. Okay, I'm not sure why I can't change it now. Okay, can. So I'll change to 20, 50, and 200. And of course, for me, I like to change the color as well. I like to use color that I can relate to, which is green, orange, and red. Anybody want to make a guess? Why green, orange, and red? Hey, did I click? Okay. Yes, fantastic. Traffic light. Okay. So what does this mean? Okay, when the light turn green, which one move first? Green light means that the car will move first, correct or not? So green is always the most reactive one. You can see when the price start going up, the green line will go up first before the orange line will start moving up. And then the red line is the lagging, the most lagging indicator. So you can actually go online and search for EMA crossover. EMA crossover. So they tell you like 20 crosses 50, it is an indicator that the trend is changing. So it works previously as well. You can see, just now I show you already. 20 cross 50, and then we have 50 cross 200. So these are what we call death cross. Going down is called death cross. Going up is called golden cross. So this one, y'all just do your own research. You already learn how to put it in already. Okay, do you have to pay money? The answer is no. All these resources are absolutely free. Okay, so for TradingView, there's a limit to how many indicators that you can put in. That's why we actually use this shortcut, 3 EMA. So this is already combined together. By right, it's supposed to be 3 different lines. Then, but if you combine together, you're only using 1 indicator. So I can still add in even more indicator. Like sometimes I use stochastic, sometimes we use RSI. So these are all the things that we can actually put it in as well. Mine already put in, so cannot. So you can see all these indicators. Okay, so all this is to help us to optimize our entry and our exit. Okay, good. I hope you all are learning a lot of things. Are you all learning something? If you are learning something, type L for learning. Fantastic. Let's go back to our chart. Okay, so we are going to go for a short break later on. Okay, so I need you all to just continue to bear with me just for a little bit more. So I want to share with all of you the second part, because just now we talked about there's 2 parts to this. One is insurance. The other part is if you don't have a stock but you think that it's going to go down, how can you benefit from it? So this is the second portion, okay, where we have a buy put bet. Okay, I call it like a bet. Okay, so the key difference you can see over here is just this one. Maximum is 90 to 120 days. Just now, earlier on when we are doing hedging, can you help me to type in how many days are we looking at? Minimum 240 days, 8 months. But this one, right, because usually it's going to be a shorter term one, shorter term. So for shorter term, we just go for 90 to 120 days. Again, we use shorter term so that we don't spend so much on insurance. We spend lesser on insurance. Then the maximum position is the same, 5%. And things to take note, when do we take profit? Number 1, price drop sharply. So after you did it and the price drop, go and take profit. Number 2, trend have changed, just like I mentioned. And number 3, left with 60 days. So you can see, let's say I go in for 90 days, and basically 60 days, I need to close it. So this one, right, sometimes the holding position is usually quite short one. So don't have to hold for long term. So all this, you have to be a little bit more active. That means when you're using this strategy, you have to be a little bit more active. When I say active, it doesn't mean that you look at a computer 2-3 hours a day. When I say active means that every day you spend maybe 5-10 minutes just to make sure that is it time to take money or is it time to enter? So again, this one don't need to take too much time. This is something that we have to understand. When I say active, people say it doesn't mean that I need to look at the computer for many hours. No, I don't. At least for me, I don't. So I just give you an example over here. So this is Boeing. So Boeing has been going sideways for the longest time. You can see previously back in 2020. But on the 26th of February 2020, something happened. Can you all tell me what happened on this particular day? What happened on the 26th of February? Yes, exactly. That was where COVID was actually announced. Then there was lockdown everywhere. So as an airline, do you think they are affected by COVID? The answer is definitely yes, because travel start to get restricted. So when traveling stop, is the airline going to buy more new aircraft? The answer is no, because everything is very, very uncertain. So because of this, right, you can see that the price actually go below the support. So this is again another technical analysis so-called strategy, which is called breakout. Okay, it break the support. So when it break the support, chances of it going down even more is actually quite high. So we have a company, okay, that is going sideways. The signal is here. And of course, this signal is backed by news, which is actually because of the COVID. Yeah, so this is definitely bad news for the business itself. So when this happened, basically we did a buy put position. And of course, you can see because of the drop, is significant drop. This is significant drop. So after you go in, right, the next thing you want to think about is, when do I take profit? So I want to ask all of you this question. If let's say you enter on this particular arrow, $300, at what price should you take profit? Okay, 100, 100, 100. Fantastic. A lot of you actually put 100. Because why? You already can see that 100 is the lowest price. Okay, but guys, I need you to understand at the point of time, do I know that 100 is going to be the lowest point? Do I know or not? I don't know lah. Okay, so in fact, right, okay, I actually took profit at about 169. In fact, some of the students that I enter together, I told them to exit. Most of them we exit together, enter and exit together. So I think I'm pretty happy with the result. Okay, even though we might not be able to get the lowest point because I didn't know that that is going to be the lowest at 100, but I think from 300 to about 169, that was close to about 45% drop. So to me, 45% drop for a company is already significant. Okay, so I thought, wow, I'm very happy with the return already. So you can see 3,400% using strategy Y. How many of you don't mind making 3,400% from this strategy Y? If you don't mind, type me. Okay, now let me share with you. This is the student that followed me through this strategy. Okay, so for this particular trade, right, he made about $10,000. So this is where I need you guys to do a little bit of a math. Okay, so you can see his return is 3,400%. He made about 9,600%. So question, how much capital did he enter for this position? How much money did he use to do the buy put? I didn't own the stock. I just based on the chart, based on the news, I say, this is a good opportunity for us to go and short it. Yes, you guys are really fast. Wow, $300 over. How many of you over here, you don't have $300? If you don't have, type 0. If you have 300, type 1. Okay, everybody have $300, right? Because why? This program is already more than $300. So I'm glad that everybody type 1. Okay, of course, like I said, you need to stick to the 5%. So which means that actually, in order for you to do this, your capital need to be at least about 6,000. 6,000 or more. So what happened is that, okay, so for him, I think his capital was about 10 over 1,000. So he allocated about $300 for this and make him 9,000 over dollars. Now, this 9,000 over dollars in profit, do you think it make him rich or not? Yes or no? Do you think $9,000 will make you rich? The answer is no. $9,000 will you make you rich? But I think this is a very, very good start because why? Remember at that point of time, back in 2020, okay, all the stock actually dropped significantly. So when everything is dropping and you actually make money, $9,000, what do you think he do with that money? Do you think he go for holiday? which technically you can't go for holiday lah. Okay, or do you think he reinvests? Exactly. So at that point of time, using this money that he made plus his original capital, he reinvests into a lot of company. Okay. And of course, subsequently, you can see just using this, he actually made multiple six-figure. Okay, I think it was close to, the last I checked in with him was about $200,000-$300,000. Okay, subsequently when the market starts going up, so after that he actually told me that he stopped working. Then I asked him, what are you doing? He said, Grab driver. So apparently, he's not the one and only few friends, right, that make a lot of money and then after that become a Grab driver. I'm not sure how many of you, right, actually you thought of doing a part-time Grab driver for the sake of trying out one. If that's you, type GD. That means you love driving. Then it's like, actually, yeah lah, just take a break lah, then go and drive Grab. Maybe quite fun. Any Grab driver wannabe? Okay lah, but I'm not sure what happened. Okay, but basically he chose to stop working and he said that he just drive Grab for fun. Okay, yeah. So again, this is possible because he actually made the money from there. Then of course he used like BOSS to continue to generate the passive income as well. So again, this is very, very powerful. So what you did, sometimes one decision that you make right can literally change your life. So that's why we always say when there's opportunity, go and grab it. Okay, because you never know what is the life-changing moment for you. So this is overall, just to do a wrap up before we go for a short break. Buy put on specific stock as much as possible. We try to do it on bad companies. Okay, because why? Chances of bad companies going down even more is relatively higher. Okay, over here say never bet against good company. But there are also scenarios where I would do it. Okay, for example, okay, I go against the syllabus. Okay, okay, so for example, certain company, I wouldn't say good company, but I would say that maybe some stable company. For example, like 3M or maybe like McDonald's and some of the very, very stable low growth company. Sometimes you realize that the stock goes up and down, up and down, up and down, a bit like HP. Okay, a bit like HP. I remember last year there was this company called TSM also. Okay, TSM, one period of time, the stock was just trading sideways. So what I do is, okay, I realize that it is trading sideways. Every time it reaches the resistance, I just go and do a buy put. So I can repeat this multiple times. So when I do here, when it reaches the support over here, what do? I take profit. So this is what I do to generate additional premium, additional ROI. And then again, I use it to invest into good company. Okay, so again, this is additional. So be ready to cut loss. So if let's say, in the particular case of this, instead of coming down, it actually went up even more. Then you know that just cut away. Just cut away. Right? Do you use a tool to screen stock? Personally, for me, not so much. Okay, I would say that for us, I think because we have a community and all that, so we also do share idea here and there. So for me, I think I have more than enough resources in terms of screening for stock and opportunity. Right. How much percent do you cut loss? For me, I don't really count based on percent because I don't really trade. So I base on the chart itself. So if it's actually obviously it's a change of trend, instead of coming down, it went up, then I would just cut it away. So for me, it's more on looking at the TA. Okay, so again, this one does comes with a little bit more knowledge. So that's why we say that for those of you who wants to be a little bit more active, you want to generate more ROI and all that, actually, that's where you can have more guidance. Okay, especially in this particular area. Next, okay, this one I have to be very upfront. For this particular strategy and all that, your TA must have certain knowledge. The better you are at TA, the more you can actually optimize this to actually help you to generate your ROI as well. Right, so one example that I want to share with you before we go for a break, this is GameStop. So we can take a look just to do a refresher. I think you guys probably forget about OMI. So you tell me, this company, is it a good company or a bad company? How many points does it get? 1 point, 2 point, 3 point. 0 point, okay. Fantastic. This is an extremely lousy company. Everything is negative profit margin. The interest coverage is extremely low, okay, because they cannot even afford to pay. So this is a bad company. So bad company, we can go to the next step, which is for entry. So you can see over here, we also have a crossover. So this one is basically everything cross together. 20 cross 50, 50 cross 200. So there's actually an opportunity over here. So for me, right, when I do this kind of short-term trade, right, I always make sure that the minimum upside that I'm looking for is 10%. That means if this is going to drop, it must be at least 10%. If it's only a 3% drop, I'm not going to do it. The risk reward ratio doesn't make sense for me to do it. Okay, so if over here, like there's a 13% potential downside, which in my case is upside lah, because if I do a buy put, it drop, I make money. Okay, then I will go and do it lah. So you can see why we ask you all at the support, you must go and take profit already. In this case, okay lah, it gives you a bit more chance. Okay, if you didn't sell, then after it comes back down. But you all can see how powerful this support is. Okay, that's where we share with you support and resistance, in TA. If you can master that, that would actually help you to optimize your ROI significantly. Really, really important skill. Right, and of course, previously in the bear market, you can see that the market actually moved pretty in this particular signal as well. So when it touches the resistance, basically what I did was I did the same thing lah. I did a buy put, I profit from there, and I use the profit, reinvest into good company, right? So what I'm going to do right now is maybe I'll let you guys go for a break first, okay? And then later on, after you all come back, then we will actually go through the think or swim, okay? Then we can actually have some example as well and some hot seat, okay? So that you guys can actually ask questions. And also for those of you who have not gotten a chance to come up later on, please, okay, prepare, okay, on your camera, and later on when we have the chance for the hot seat to get a live feedback and guidance, okay, just take the opportunity because we don't really have a lot of hot seat left. So if you have any burning question later on, just come up and then you can actually ask me any question as well. So right now the time is 3:42. Let's go for a short 5 minutes break and let's come back at 3:47 sharp. Right, let's go.